Good morning, traders. It is 8 a.m. Chicago time on Thursday, the 4th of August, 2022. This is episode number 2287. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we have a market that is digesting what had happened yesterday. Here's the pre-market summary sheet from Convergent Trading this morning. The market sentiment is around mixed, slightly on the bull side, but mainly mixed risk posture. The key news this morning, the macro news, is that the BOE, Bank of England, raised 50 basis points as expected, but with hawkish remarks stating that there would likely be at least 5 quarters of a recession coming up. Earnings were strong yesterday. Earnings were strong this morning. Toyota reported. Toyota, Cigna, Alibaba, ConocoPhillips, Arrow, and Coca-Cola are the big ones. Brazil hiked 50 basis points as well. And China continues to do its military exercises and to send drones over Taiwan and so on, an intimidation attempt. And I want to remind everybody that it is non-farm payroll tomorrow. We're looking at numbers that are softening. In fact, when you look at the release that just came through this morning from the initial claims, that's gotten a lot softer too. So the non-farm payrolls are likely to come in. The weekly claims is connected. So take a look at this. This is about a year's worth of initial claims, high claims. Then we hit a trough down in the 170,000 or so on the weekly initial claims, and these numbers are rising. So more and more people are claiming unemployment benefits. If you look at it, it's still it's back to where it was pre-pandemic, but overall we have an uptick in the number of claims. So tomorrow, expecting this number to show. Let's take a look at the non-farm payrolls over the last year. Here's what you've got. See those numbers there? They're kind of falling off a cliff, really. You would expect them to be really high after the big layoffs from March 2020, of course, and in the recovery. But this is another indication. The unemployment rate's very low, but this is another indication that new jobs are not being created at the pace that they were, which is another notch in the favor of the argument for a recession pending. So that's that. Let's take a look at what's expected for today. So overnight, as I said, we had a bunch of numbers. I'm not going to go through each one of them. The headline was balance of trade came in better at $79.6 billion deficit versus $83 billion. Not much of a reaction there. We do have crude still. I don't know if you traded crude yesterday. Wow, what a day. It finished down about 4%, finished near lows, and is basically unchanged on the session today in a completely balanced. The crude has gotten a lot of, no pun intended, a lot of the energy out of it as it sits sideways here, unchanged at $90, folks. So it was $100 just a few days ago or something, or last week, I don't remember. In any case, crude is important. We're watching that, and then the indices are mainly unchanged. Europe's a little bit higher. Looking at the calendar ahead, Fed's Mester, Fed's Daily made some comments yesterday that were really market driving or market impacting. So the Fed speakers are really important to listen to. Hopefully you have a news feed and you keep that turned on so you know when that's coming through. Sometimes they're not scheduled when they say what they say. But anyway, today we have Fed's Mester at 12 p.m. And then we have some Australian numbers later in the session. Looking at the S&P is in a B-shaped profile. I'll switch to the chart here in a second, but the stats so far, B-shaped profile, 162,000, which is quite normal. The inventory is almost even. Remember, the S&P is only up 3 points. It's basically unchanged. 3 points is about half a rotation. The inventory is 10% long. The range is pretty poor. And what this is likely forecasting is a very slow session. Now, I've said that before. I'm seeing Coke on here. Hang on. Are these guys wrong? I mean, Coca-Cola. Is this wrong? Yeah, not sure. Anyway, I'm pulling off of Benzinga's earnings page, and it shows it on there. They've been wrong a fair amount in the past, actually, so I'm not sure. Thanks for pointing that out. In any case, the S&P is in a B-shaped profile, still recovering from yesterday. Let's take a look at what has happened so far in the S&P. Oops, hang on. There we go. So, S&P, let there be yellow. So the S&P, remember, we've been in this balance with 120, 4120 being the point of control. This balance, if I scroll back, you'll see, is in line with this big balance from May through June. And yesterday did not breach the top of balance. I know this might be controversial here to say this, given that we finished in the upper quartile of the range yesterday in the S&P and what was a bullish day. It is likely, in my opinion, it is likely to snap back. The structure yesterday for the rally was relatively poor. We are still inside of the balance here. It is likely to take out the high. If it will today, it'll likely take out the high and snap right back. So if we look at some indications of that, if we look at the active chart, look at what it's done here. It has rallied, pushed the prior session high at 4170 and snapped right back into the prior session's point of control. So we're trading right into the prior session's point of control. So we accomplished the higher high overnight, which we expect after a rally day. And it's holding the low volume node from yesterday right in here. That's basically today's low, 4150. So we are stuck here between 4170, 4150. I think another attempt higher is likely to finish or dissipate the last of the buying, and I'm expecting it to roll over. I know if you look at the one-time framing and you look at all these things, it's indicating, the indications are that it's one-time framing up, it's trending up, but we did leave a lot of, one of the signals we left yesterday was a 48.5, and that's basically been filled in this morning, although single prints have to be filled in the RTH session, but overall, I'm expecting the buying to be relatively weak at these prices. Why? Because we are in balance. Despite the rally from yesterday, that rally is within balance, and we tested almost to the extreme. We didn't take out the balance area high, and we're likely to fall back in. It was very quick to snap back this morning to where it was. Let's take a look at the S&P. On the order flow, you could see right here, little consolidation, and you could see the push is very weak push, very weak delta on the push, and then when it sells off, the delta comes back in and it's relatively decent. And then you have the follow-on drop into VWAP and mid and into the overnight point of control, or towards the overnight point of control, 41.52. So to me, this does look weak. I may be wrong. I'm maybe calling it early, but this is the way it is looking. This is the way it's looking right now. So if we look back to the TPO chart, if you look at the TPOs, you'll notice that there are single prints, and this thing is very thin down here. It ran away from the 41.20 pretty quick, and it's likely to be exhausted, and it's likely to turn back down. We'll see what it does this morning, but that's how it's reading. Looking at the intraday chart, we had pretty good bounce. We were rolling over. So we had point of control up here. We had the point of control shifting down. We had the point of control shifting down. And then we had the rally from yesterday. Which was, again, a very thin, very multi-distribution profile. You had value following price, but really we didn't find value. We just ran out of time. So this morning I'm looking to see how does it behave towards that 41.44, the prior week's high, and the high that we put in on Monday. I want to see how it treats these. On first test, I'm expecting support down here in the 41, 44, 45 area. But if it gets below, so it's all bullish and everything is perfect and everything is grand according to the stock market, that's cool. I don't have any prejudices either way. But if it does get below the 41, 44 this morning, especially if it takes out the 50 and stays below, it's likely to push. If it gets below the 41, 44 and has a weak pullback, I am looking short, and I'm going to target the 41.20 for a return to balance. Okay, and what this becomes is an outside-in trade, tested the high, couldn't sustain the high, rolls over, and then moves back into balance, which is what's expected. I am not going to be fooled or swayed, I should say, by the fact that we had this big trend day. The fact is, the context and the narrative is that we had this big trend day in the middle of balance. So we didn't exit balance. This is like the analogy I'd have for this. It's like a moon around a planet. You know, it's holding an orbit that's balanced. It's balanced. It's spinning. It's spinning. It takes quite a bit for it to accelerate hard enough to break the gravitational pull of that planet, and then to accelerate out into space, parabolically move out into space. And what this is it's just wobbled a little bit. It has not escaped that gravitational pull that 41.20 and this range has. The range high here is about 41.76. We got to 74 this morning, 73.25. So to me, I'm not going to be fooled by the rally. I do understand that because it rallied and because the point of control finished at the high, so we shifted value to the high end, that this high from yesterday at 41.70 is likely vulnerable, is very likely vulnerable. And it may very well be taken out, but I'm not looking for a breakout to the long side. Okay, so I'm just putting it out there because the short-term view is this was a rally looking for a pullback to get long, the continuation, and that may be the case. I don't know, but I'm going to be very keenly watching 41.50 in RTH trading. Remember, 41.52 is the point of control, 41.60 is the mid, and the 58 and a half right now. We're trading 59, 41.58 and a half is VWAP. I'm looking for it to come back to settle, and I'm looking for the quality of the move down. The quality is important because the quality speaks of the kind of aggression or panic or energy that's going into a move. So that's where the order flow comes in. That's where reading reading the order flow, or reading how the market's moving, or reading price becomes really important. Because if this morning it looks like it is just trying to go up, and then it just lets go, and then it tries to go up, and then it lets go easily, to me, I'm going to lay off the buy button, and I'm going to stay put unless it takes out 41.44 in an accelerated or an impulsive way, and then has a weak pullback. That's a setup short for me. And if I'm setting up to go short, it's a 4-point stop for me. And I'm looking for 41.20 from the 44.40 area. So I'm looking for 20 points for a 4-point stop. By the time I scale out and everything, it'll be a 3.5 to 3.2 R trade. I'm looking for 3R trades. So that's where I'm focused. Otherwise, if this thing accelerates out of here, if this moon is able to leave this planet, this orbit, then we have some key areas up above, namely the 4189, the 4195, and 4200 just above. That's only 50 points, well within 1 day's range. But again, I am very tentative, especially with the non-farm payrolls, unemployment numbers coming out tomorrow. To me, this is a time to, holster my gun a little bit and not be trigger happy on a day like today. So that's the key thing I wanted to convey to you. The order flow supports this. If we look at the relative delta here, look at the S&P relative delta. We've had relative delta controlled by the small lots mainly, with large lots not participating very much and then selling now into this very large lots mainly selling, and now it's turning over. To me, we're likely to see some selling coming into the open today, and we're likely to rotate and retest the regions below us, especially the 41.4850, the overnight low of 48, and then start moving through the areas built from yesterday, 41.37, and then down into 41.20. That's the key element. I've talked about if that fails and the buy side continues higher, it could, but indications are not likely. Also, the range overnight is quite tight. It's well within the statistical norm, but it's relatively tight. So again, temper expectations coming into tomorrow's non-farm payrolls. All of this gets thrown out if we have some major news, China does something crazy or whatever. We'll see how that goes. But as far as bullish news, as far as inflation, Fed, it's all kind of been factored in, and the market's already absorbed it and has already priced it in, and is pricing in the likelihood that the Fed will have to stop raising rates. And that's what the bond market is saying. That's what the Eurodollar market is saying. And it's just a function of how these numbers look. The Fed needs a lot of numbers to make decisions. It's the Titanic. I don't want to say the Titanic. It's a big ship. It doesn't turn on a dime. The market can turn on a dime, but the Fed does not. So we'll see. So that's the whole picture. In terms of crude oil, very bearish. Oops. Very bearish. Look at this action. It's really, again, derivatives trading is not suitable for all investors. I want to remind you. But with that being said, my opinion is yesterday's trading has been just very nice structure. I see a nice support structure right now here in crude into the 89.66. Look at this thing just battling. Look at this order flow. Remember, crude opened about 20 minutes ago. Look at the order flow. See those dots? There's a fight taking place down here. And this is the green level here is what? The key support stock zone. This area is really important. And I would expect a fight here. And boy, are we getting a fight. We see that both sides are fighting. Here's another view. See those bubbles? Look at those bubbles. And pop. This a lot of trapped shorts here. So this is likely to pop right back into 90.16, a nice little setup there off of the key support stock zone. That's happening live right now. So my focus is a little more crude today than S&P, although yesterday had some pretty good setups in the S&P as well. Anyway, I won't ramble on. I'll leave you with that. Follow your process, follow your plan. Without a process and plan, without assessing your R factor for every trade, you're just gambling, and it's just a matter of time before the market will absorb your account into someone else who is following a process and a plan. Somebody wrote to me and they're like, yeah, all this stuff you talk about in the trader bites, all well and good, but there are these predatory algos and the market's there to take your money. And just, if you have a perspective on the market, I just want to spend a minute on this. If you have a perspective on the market as that it is a predator and it's threatening and it is there to destroy you, then I would suggest you stop trading. I would recommend you stop trading immediately, at least trading live immediately. The market's function is not to hurt you. We do that ourselves. Okay, we get to choose to participate. We get to choose how much we want to put up in order to see if our plan works. The market is just simply advertising everybody's opinion on whatever the commodity or product or stock or whatever crypto you're trading. That's it. So people respond in weird ways. The market is a mathematical representation of people's emotions about the future of the economy, the equity, the commodity, the Forex pair, whatever it is. The macro picture, you get to vote. That's what the market is. So if you see the market as a threat, I can't imagine that it would be easy for someone to make money. And if you do make money, I can only imagine that it would be very, very easy to lose it, because we're operating out of fear rather than fact. When fear kicks in, all kinds of chemicals kick into the brain, and we're not able to assess things for what they are anymore. And the money is in the process and being able to assess things as they are. Okay? So this idea that, oh, these algos are here to take my money and they know what I'm doing, it's whatever, man. Believe that if you wish, but I don't think that's the truth. Follow your plan, process, make sure your trades are reasonable, give you a reasonable return for the risk. If they don't take them. Good luck, and I'll catch you tomorrow morning. Don't forget to subscribe to the channel and hit the like button, and we'll keep talking. Tomorrow's non-farm payrolls and unemployment. Be here early and ready for that. Take care.